Hello Finance Kida family. This is very important video related to investment banking. Interview questions, and these are situational based questions and very likely to be asked in the interview. Please note that apart from these questions, a lot of technical questions are asked during these interviews. You must go through all the three FP&A interview questions videos on our channel. Let's get started. Question number 1. Your client is considering a merger with a company that has a significantly different corporate culture. How would you assess the cultural fit and advise your client? Let's understand. When considering a merger with a company that embodies a distinctly different corporate culture, it is imperative to conduct thorough cultural due diligence. This begins with assessing the target company's culture through a combination of surveys, interviews, and direct observations. Understanding the values, behaviors, and practices that define their workplace environment will illuminate potential culture clashes and highlight areas of alignment. Once we identify these dynamics, it is crucial to develop a robust integration plan that addresses the inevitable challenges of merging two distinct cultures. I would advise my client to implement targeted training programs that foster understanding and collaboration between teams, ensuring that employees from both organizations feel valued and included. Additionally, aligning leadership styles and communication strategies will be essential in guiding this transition. Ultimately, a successful merger hinges not just on financial metrics, but on cultivating a unified culture that promotes growth and innovation. Answer should include the focus on below points. Assess the target company's culture through surveys, interviews, and observations. Identify potential culture clashes and areas of alignment. Advise your client to consider cultural integration strategies such as training programs and leadership alignment. Question number 2. You're working on a cross-border acquisition, and the target company has a complex ownership structure. How would you navigate the ownership dynamics? Let's understand. Navigating a cross-border acquisition with a complex ownership structure demands a meticulous strategy. We begin by dissecting the ownership dynamics, pinpointing key stakeholders who hold sway over the target company. This requires mapping the intricate web of shareholders, including minority interests and potential alliances. We must also scrutinize possible conflicts of interest and ownership risks that could surface during the acquisition. Understanding these dynamics is essential as they can shape negotiations and determine the deal's success. Engaging proactively with stakeholders fosters transparency and collaboration, while a well-crafted ownership strategy addresses concerns, mitigating risks, and ensuring a smoother integration for a sustainable partnership. Answer should include the focus on below points, analyze the ownership structure, and identify key stakeholders. Assess potential conflicts of interest and ownership risks. Advise your client to consider negotiating with key stakeholders and developing a comprehensive ownership strategy. Question number 3. A client is considering a divestiture, but the business unit is deeply integrated with the rest of the company. How would you advise on the separation process? Let's understand. When advising a client on a potential divestiture of a deeply integrated business unit, the first step is to conduct a thorough analysis to identify areas of integration and potential separation challenges. Understanding the interdependencies with other units is crucial. Next, we must develop a comprehensive separation roadmap, outlining clear timelines and milestones to ensure a structured approach. It's essential to consider transitional service agreements, TSAs, to maintain operational continuity during the transition. Additionally, implementing retention strategies for key personnel will help preserve institutional knowledge and facilitate a smoother separation. This strategic planning will ultimately support a successful divestiture while minimizing disruption. Answer should include the focus on below points. Identify areas of integration and potential separation challenges. Develop a separation roadmap, including timelines and milestones. Advise your client to consider transitional service agreements, TSAs, and retention strategies. Question number 4. You're building a model for a company with a complex debt structure, including multiple tranches of debt with different covenants. How would you incorporate these features into the model? Let's understand. When building a model for a company with a complex debt structure, the first step is to identify the key debt tranches and their respective covenants, as these will significantly influence the financial health of the organization. Next, I would develop a comprehensive debt schedule that outlines each tranche's terms, interest rates, and repayment timelines, integrating this into a robust cash flow model to assess the company's ability to meet its obligations. Additionally, I would advise my client to explore debt restructuring or refinancing options, as these strategies can enhance liquidity and optimize the capital structure, ultimately supporting sustainable growth and stability. Answer should include the focus on below points. Identify key debt tranches and covenants. Develop a debt schedule and cash flow model. Advise your client to consider debt restructuring or refinancing options. Question number 5. A client asks you to create a scenario analysis for a company with multiple business segments, each with different growth prospects. How would you approach this? Let's understand first. When tasked with creating a scenario analysis for a company with diverse business segments, my first step would be to identify the key segments and their respective growth drivers. Understanding the unique market dynamics, competitive landscape, and consumer trends for each segment is crucial. Next, I would develop tailored scenarios, a base case reflecting current expectations, a bull case highlighting optimistic growth trajectories, and a bear case addressing potential downturns. This comprehensive approach allows us to visualize various outcomes. I would advise my client to consider segment specific strategies and allocate resources accordingly, ensuring a balanced approach that maximizes growth while mitigating risks. Answer should include the focus on below points, identify key business segments and growth drivers, develop scenarios for each segment, including base case, bull case, and bear case. Advise your client to consider segment specific strategies and resource allocation. Question number 6. You're working on a model for a company in a highly cyclical industry, and you need to forecast revenue and expenses over a 5-year period. How would you incorporate industry trends and cycles into the model? Let's understand this. In developing a forecasting model for a company in a highly cyclical industry, the first step is to thoroughly analyze industry trends and cycles. This involves examining historical data to identify patterns in revenue fluctuations and expense variations. I would then incorporate cycle indicators, such as GDP growth rates and consumer demand metrics, into the model to enhance accuracy. It's crucial to advise clients on cycle-resistant strategies, such as diversifying product lines or exploring new markets to mitigate risks. Additionally, contingency planning must be emphasized, ensuring that the company is prepared for downturns while capitalizing on upswings for sustainable growth. Answer should include the focus on below points, analyze industry trends and cycles, develop a forecasting model incorporating cycle indicators and industry metrics. Advise your client to consider cycle resistant strategies and contingency planning. Question number 7. You've issued a research report on a company, but new information comes out that contradicts your thesis. How would you update your report and communicate the changes to clients? Let's understand. In light of the new information that contradicts our initial thesis, the first step is to thoroughly review and assess its implications on our original analysis. This involves updating our financial models and estimates to reflect the revised outlook accurately. Once we have recalibrated our projections, it's crucial to communicate these changes transparently to our clients. I will highlight how this new data influences our investment thesis, ensuring they understand the rationale behind the adjustments. This process not only showcases our adaptability and analytical skills, but also reinforces our commitment to maintaining open lines of communication, fostering trust, and informed decision making. Answer should include the focus on below points, review new information and assess its impact on the original thesis, update financial models and estimates as necessary, clearly communicate changes to clients, highlighting the impact on the investment thesis, focus, adaptability, analytical skills, communication. Question number 8. A client asks for a customized research report on a specific industry trend. How would you approach this? Let's understand. When a client requests a customized research report, the first step is to clarify their requirements and objectives. I dive deep into understanding what they really want. Next, I roll up my sleeves and conduct thorough industry research and analysis, gathering insights and trends. Then, I craft a tailored report that directly addresses their needs, ensuring it's not just data, but actionable insights. It's all about being client focused, leveraging my industry knowledge, and showcasing my research skills to deliver value. Answer should include the focus on below points: clarify clients' requirements and objectives, conduct industry research and analysis, develop a tailored report addressing the client's needs. Focus, client focus, industry knowledge, research skills. Question number 9. You're covering a company with a complex business model, and you need to estimate the impact of regulatory changes on the company's cash flows. How would you approach this? Let's understand. First, navigating the complexities of a company with a multifaceted business model requires a meticulous approach, especially when assessing the impact of regulatory changes on cash flows. First, I would conduct a thorough analysis of the regulatory landscape, identifying specific changes that could influence operational costs or revenue streams. Next, I would delve into the company's financial statements, scrutinizing key metrics to understand how these regulations might alter profitability. Utilizing scenario and sensitivity analysis, I would estimate potential cash flow variations under different regulatory conditions. This process demands not only regulatory knowledge, but also sharp financial analysis and critical thinking to forecast a company's resilience in a shifting environment. Answer should include the focus on below points: analyze regulatory changes and their potential impact on the company, review company's financial statements and business model, estimate the impact on cash flows using scenario analysis or sensitivity analysis, focus, regulatory knowledge, financial analysis, critical thinking. Question number 10. You've issued a research report on a company, but new information comes out that contradicts your thesis. How would you update your report and communicate the changes to clients? Let's understand. In light of the newly surfaced information, it is imperative to reassess the company's fundamentals and our initial investment thesis. Objectivity is paramount. We must analyze how these developments alter our perspective on the company's performance and market position. I will update the report to incorporate these insights, ensuring clarity and transparency in our findings. Communicating these changes to our clients is crucial. I will highlight the implications for their investment decisions, emphasizing our commitment to informed guidance. This process not only reflects our analytical rigor, but also reinforces trust as we navigate the complexities of the market together. Answer should include the focus on below points: reassess the company's fundamentals and investment thesis, update the report to reflect new information and insights, communicate changes to clients, highlighting the impact on the investment decision, focus, objectivity, analytical skills, communication. If you are still watching the video, congratulations. You are quite near to crack the interview and get your dream job. Again, reiterating, this video includes only situational based questions, and in the interview, lots of technical questions are also asked. So kindly watch all the 3 videos of FP&A interview questions on our channel. You may also click as highlighted on screen. Finally, a heartfelt thanks for watching video, and don't forget to like, share and subscribe Finance Kida channel.